Let's start with something counterintuitive about association finances. More detail isn't always better. Many boards think extremely detailed general ledger accounts provide better oversight, but this often creates more problems than it solves. Watch for this red flag. If only one board member seems to understand your financial statements, while every other board member sits quietly, you've got a problem. When most board members can't confidently explain what they're approving, your reporting system simply isn't working. Think about what happens when you have separate line items for every type of maintenance utility or administrative expense. Management companies inevitably struggle with consistent coding. Should power washing go under cleaning expense or building maintenance? And suddenly your board meetings turn into a tedious accounting debate instead of strategic discussions. Too often, boards spend precious meeting time arguing whether a $200 plumbing repair belongs in common area maintenance or plumbing repairs, while completely missing the $50,000 reserve shortfall on the same page. The goal should be finding that sweet spot, enough detail for transparency without creating a financial maze that only one board member can navigate. Now let's focus on what actually matters in your financial statements. Consider your own personal finances for a moment. Would you create separate categories for every restaurant you visit, different grocery stores, each type of book you buy, or separate lines for your cell phone versus home internet? Of course not. You'd use broader categories like dining, groceries, entertainment, and utilities. Now imagine scaling that personal budget to track expenses for 200 or 500 or 1,000 households. And instead of categorizing each transaction, it's someone who doesn't know your community doing the coding. Then that person leaves and someone new takes over. Each layer of complexity and each staff change multiplies the chance for errors. This happens all the time in associations with overly complex charts of accounts. Start with your balance sheet. It should clearly show operating funds, reserve funds, and significant liabilities. That's your financial foundation. For your income statement, consolidate similar expenses into meaningful categories. Instead of 15 different maintenance line items, use broader categories like building maintenance, ground maintenance, pool maintenance. This makes variances more meaningful and discussions more productive. The best approach? Design your chart of accounts around decision making, not transactions. Ask yourself, what financial information do we need to make good decisions? For most associations, this means tracking expenses by major components or areas, not by vendor or specific service type. Consider creating a simple dashboard report highlighting key metrics, reserve funding percentage, delinquency rates, major variance explanations, and upcoming significant expenses. This shifts board discussions from accounting minutiae to strategic governance. Remember, financial statements should inform decisions, not consume your entire meeting. Let's talk about one of the biggest pitfalls of complex financial reporting, the recoding trap. Here's the scenario. Your board receives financial statements, disagrees with how certain expenses were categorized, and asks your management company to recode transactions that have already been reconciled. This creates a whole cascade of problems. For your management company, it's a logistical nightmare. They've already closed the books and reconciled the accounts. Going backward means double work and introduces the risk of errors. For your board, these recoding debates can completely derail meetings, prevent timely approval of financial statements, and push important decisions into disjointed email threads. The irony is painful. Boards seeking greater detail end up losing sight of the big picture entirely. You can't see the forest or the trees. This is especially common when you have multiple detail-oriented professionals on your board, attorneys, engineers, scientists, for example, who bring their professional standards to volunteer roles with different requirements. To implement a better approach, work with your management company to consolidate similar line items. Don't have 3 different water expense categories. Combine them and save the detail for supporting documentation. Don't separate roof repairs from masonry repairs unless your reserve study specifically requires tracking them separately. Create a transition plan that maps old line items to new. Simplified categories so you can still make historical comparisons. Consider quarterly deep dives into specific areas rather than monthly microscope examinations of every line item. The most successful associations use simplified monthly reporting for regular meetings with quarterly deeper analysis of specific areas on a rotating basis. This maintains proper oversight while preventing the analysis paralysis that plagues so many communities. Your financial reporting structure should serve your governance, not dictate it. Understanding your association's finances isn't about becoming an accountant. It's about creating systems that support good governance. Remember these 3 principles. Find the right balance between detail and clarity. Focus on strategic reporting that drives decisions, and implement a simplified structure that works for your community. When it comes to association financial statements, the goal isn't perfect accounting. It's effective governance. Simplify where possible, focus on what matters, and keep your board's attention on strategic decisions rather than accounting classifications. If you found this perspective valuable, we invite you to connect with us. Facebook viewers, like our page and follow us for regular updates. Feel free to message us directly with your questions or community challenges. Instagram viewers, hit follow and feel free to DM us with your questions or community challenges. YouTube viewers, subscribe to our channel and check out the video description for helpful links. Visit our website to discover our thought leadership content, books, and resources that can transform your community management approach. Whether you're dealing with the challenges we discussed today or other community issues, we're here to help. Thanks for watching, and we'll see you in the next video.